Let's connect with Phani Sekhar, represents Angel Stockbroking. Phani, morning. Thank you for joining us. Phani, what do you want to start with? The CCI order on cement, why US markets cracked last night, or the fact that why Indian markets are outperforming despite global odds?
Well, I would start with congratulating you on your 3rd anniversary to begin with.
Thank you so much.
All the 3 points are important, but to be oil at 90 overrides everything. And I don't see, frankly, why markets, especially Indian markets, must be disappointed with oil at these levels. Although I do not rule out the possibility that in line with other global markets, we will also tend to open lower. But that will be a good opportunity to look for stocks rather than, looking to sell out. Because for all the ills that we are in, even if you think of reducing fertilizer subsidies and fuel subsidies and the rest of the subsidies, nothing can come close to oil itself correcting to $90. And the limited political space that we have, with such steep correction of oil, notwithstanding some depreciation in rupee, it obviates the need to take any tough decisions. So I think, under the given circumstances, it could not have been better for India. So I'm personally quite delighted to see oil at these levels, and I see it's a positive for Indian markets.
Phani, what about the cement pack? Are you a little shocked with the quantum of the penalty slapped?
For the last 3 years, I have been in that small minority camp on the street that had never understood, cement. So on show after show, I would, express my helplessness to give any insight on where cement stocks might go, because I looked at them from a demand and supply perspective. And the valuations and the numbers that they were posting were completely out of line with what the situation on the ground was and what their end user industries, especially infrastructure and housing, were experiencing. So, 3 years down the line, this CCI order, I can only say, has personally enlightened me. So going from here, where do these cement stocks go? See, they are not very cheap. Most of them are trading at a premium to their replacement value. So even if they correct a little bit, I don't see why investors should be rushing into these cement stock as if there is no tomorrow. The right time to buy these commodities. And I think most of us are forgetting that cement at the end of the day is a commodity. And the right valuation to buy these commodities is at a steep discount to replacement value. This is relevant for investors and not so much for short-term traders. So investors must keep in mind that there is a long time for them to look at buying cement stocks, and they should only look at buying them, on very steep corrections, something that I don't see in the very near term.
It's funny. Would you agree with my assessment that avoid cement but don't avoid metal, because intrinsically metal stocks are looking cheap?
Metals have entered that interesting zone, but again, from an opportunistic point of view, and looking at the overall scenario which you painted for cement, for metals it's not very different, except that the backdrop is a little different for them. And most of them who have got overseas operations also have nothing good going in their Indian operations, so there is no savior for them from that point of view. Most of them are at close to or at a little discount to their book value. But considering the amount of debt that they got on their books, I would be a little cautious on buying them at this point, and I would still wait for deeper corrections in these stocks.
What about Reliance? Because that has, increasingly turned into a damn squib of a stock. Can we expect any hope of a revival and see some upside in the stock price?
Not in the very near term, because what Reliance represents today is asset value. And I don't see in the current environment how many investors would be enthused to buy into asset value, because over the next 3 to 4 quarters, you don't see any great catalyst for monetizing these assets. So while assets like KG-D6 or the refining assets are great assets to have in the very long term, but since the outlook for them in the near term is relatively tepid, I think the stock will languish around these levels for some more time to come. However, for very long-term investors, bad days in market and steeper declines in the stock closer to 700 or 680 are good levels to keep accumulating. But don't expect any fireworks in the very near term.
Funny, so the news from the commodity world is good, but the news from the currency world is disappointing. Why do you think rupee is still in a free fall zone despite crack in commodities?
That's a little baffling because, with oil being our prime bugbear and with oil on a correction mode for the last 1 week, there was no immediate provocation for the currency to depreciate more. But I would tend to associate more with, very near-term factors like maybe more than normal demand for dollars. And that maybe explains why the Reserve Bank is not very aggressively intervening in the currency market. If the trend in the oil continues and if you find oil at $85 or $80 over the next 15 to 20 days, then I don't see why rupee should be at 56. I think rupee should appreciate all the way back to 53 or 54.
Strategically, how would you plan your entry and exit in Tata Motors? And the cue here is that Tata Sons on 20th of June, they have increased their ownership in Tata Motors, through open market. Similarly, if I take the clock back, Tata Motors, when it appreciated to 320, closer to 300, rupees, Tata Sons was a net seller in the stock, closer to 240. They are net buyers in the stock.
Well, it's a little bit surprising. I was not aware of this data. It is more surprising because, someone like Tata Sons should be selling the stock at around 300 or 320. They might have their good reasons to do that. However, as a minority investor with not potentially such a long-term view as maybe Tata Sons can have if they chose to, I would be more choosy and careful about what valuations I would like to enter in. And I would say that even at 240 rupees, I think from a 1 to 2 year perspective, I'm not too sure of whether Tata Motors will be able to generate that kind of value, for the simple reason that the run-up in the stock in the recent times has been on back of its global sales. Now, when the entire world is fretting about what is happening to the global sales, especially emerging markets like China is slowing fast. Now China is expected to grow at 8 or 9%, all the way down from 11%. I don't know how well Tata Motors can do in these kind of markets. So, I would try and play safe, especially when I have other more lucrative options in the Indian markets.
How would you define real estate? Bad business, good price, or still a bad business and still at a bad price?
Well, depends on how you define business for whom. It's a good business for the entrepreneur who is doing it, but it's a bad business for a minority shareholder who wants to get into it. So, a bad business at any price generally is a bad proposition, and especially some of these Mumbai-based real estate players, it's a little bit tricky for them in the short term, considering that yesterday your Urban Development Ministry was gutted in Mantralaya fire. I don't know what happens to their project approvals, which are at different stages of in the process. So it's a little tricky for them in the medium term, especially the Mumbai-based players.
Phani, do you think for Indian markets to genuinely bottom out, rupee has to bottom out first?
Yes, that is true. But as you correctly alluded, it's more of an interplay of what's happening to dollar and euro. But that also is an opportunity because what is in the absence of any fundamental pressures, this correlation of rupee with what happens to dollar and euro is also going to be short-lived. And to that extent, there is going to be reversion to the fundamentals, which means that rupee, if the commodity prices continue to soften and stay at 5 to 10% below the current levels, rupee has to appreciate over a period of next 3 to 6 months. So that's an opportunity for markets, and markets in this case might look at it as an opportunity and bottom out much before the currency market bottoms out.
Phani, what is your sense on how bad could be the hit for Bajaj Auto because of the export slowdown that they are seeing in three-wheeler segment in Sri Lanka?
That's a specific problem that Bajaj Auto has been experiencing, because of an increase in duties proposed, affected by the Sri Lankan government. One always was a little concerned about that, and this has come to the fore. So, I agree with the assumption that around 1 to 1.5% might be shaved off at the EBITDA level. But there will also be some respite with rupee generally at around 55, 56 levels. Even if it appreciates back to 54, 53, that's going to be around 8 to 9% higher than what it was for last year. So there will be some cushioning of the impact, but the impact of 1.5% at the operating level cannot be ruled out.
What's on your mid-cap watch list, Phani?
One has generally been looking at, stocks like VST Tillers, which is more into the agricultural implants and equipment sector. In print media, I'm favorably inclined towards the Hindustan Media Ventures, and generally positive on some well-run mid-cap public sector banks like a Dena Bank or an Andhra Bank.
Phani Sekhar, is there merit in buying oil marketing stocks? Crude prices have corrected. There is a serious need of policy reform. If one, does two and two together, maybe we could be in for a diesel price hike soon.
Well, a diesel price hike with oil at 90, I don't agree with that. There is simply no stomach for the government to go and do that. It will be great if they can sustain the petrol price hike without reducing it. But on OMCs, I am considerably less positive than where I was, say, 1 year back, because I think even if with oil were to correct even a little further, there might be 5 to 10% more appreciation in OMC stocks based on the current subsidy arrangement that we know. But structural reforms in the fuel side, to my mind, are ruled out at least till this government lasts.